Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates and 10-year note yields back on the ascension, going higher. We got close to 290 today, still well below the 3% target we've been talking about. And yes, I do still believe we'll get there possibly Friday if we get a very strong employment figure. Likewise, we may have to wait until we get some more inflation data or even March FOMC. But yeah, we're certainly on our path to getting to 3%. We just may see a few hiccups on the way. And if you look at market volatility, yeah, it's higher, but it feels like things are starting to calm down. But just to give you a reference point, we've been higher since the middle of February to today than we were between May of 2017 and February of 2018. So we're definitely still elevated. We're just not on those extreme highs. We're not seeing the market sort of panic. And when days when stocks are higher, everybody seems to take a deep breath. Yields did creep higher, but didn't shoot up and didn't certainly threaten to break any areas. So right now, I think the market is we got employment this Friday. We've got some inflation data following week and then following that you have March FOMC. So there are some reasons why implied volatility should be higher. Likewise, some reasons why yields could go higher. Now let's look at one other thing here that kind of came out of left field, or it didn't come out of left field, but it was in the news today. The Volcker rule. Volcker rule could be changed again. Recall the Volcker rule takes away prop trading abilities for banks that are FDIC insured. So if you say everybody can go back to prop trading, it obviously brings a whole new layer of players back to the market, which brings more liquidity, which brings more price action, which I think is very good. It brings a more two-sided trade. So nothing has been set in stone yet. We heard Fed Governor Quarles talk about it. We've heard some other Fed whispers about it. Amending the Volcker rule to somehow bringing back banks would be, I think, very positive to the market. Obviously, the more liquidity you have, the more players you have, I think the more price efficiency will stand out. So right now we're seeing Treasury yields creep higher, but certainly not seeing a trend yet. We do have employment this week, and we do have key inflation data the week after. That could be what the market's waiting for. This is Todd Colvin coming to you from the floor of the CME Group.